Hi, I'm John Fitzgerald and welcome to this week's edition of Team Wealth Builders. I want to talk about the economy this time. There is so much happening and from my perspective it's all positive. And I suppose the most positive sign we've got is the real estate market, which is booming. Of course the newspapers are talking about a property bubble, all that sort of thing, but there is buyer activity and every single bank economist, every single survey that's done is saying consumer sentiment is on the up, banking's on the up, that is credit is increasing, which is positive, and house prices, auction clearance rates are improving, and most importantly the volume has increased and now decreased. And this is something very interesting. When we come out of a massive downturn, what you see is a lot of volume of property hit the market. And we saw this in Sydney about a year ago. So my pick is, and I was saying it, it was October 2012 that the boom actually started. And what was the boom at that stage? It was buyers coming into the market in droves. Auction clearance rates heading up 70, 80+%. But also what happens is, when there's that wave of buyers in a market, there's also that first panic sellers, those sellers that flood the market with properties. They've been waiting and waiting and waiting and waiting through the GFC until there's been enough buyer confidence in the market. Now Sydney's been very interesting because it took around about 4, 5, 6 months for those buyers to wash through until we started to see massive price growth. And that massive price growth started around March, April, May, June, so that quarter, that April, May, June quarter. The July, August, September quarter, that price growth is accelerating, and it's been accelerating since then, where it's gone from circa 20% per annum on a weekly annualized basis up to nearly 50% growth per annum. So we're seeing weeks where prices in Sydney of houses are going up by nearly 1%. Now Melbourne is about 6 months behind that. So we have the boom started in Melbourne, lots of property came on the market, plus there was all of excess stock on the market, particularly in the units. They're now washing through, particularly with self-managed super funds and Chinese buyers. And Brisbane is only just starting. That inner ring, that 10Ks, has probably increased by easily 10%, and now it's panning out. Right across the country, you're seeing this growth, this confidence. But getting back to the economy is very interesting because we've got the lowest interest rates in record. The Reserve Bank saying they're concerned about the mining boom coming off, and that is the construction workers reducing. So they want to increase the activity in property, and particularly construction and development. And that's what's happening in the cities, where you can almost watch it happen. The biggest signal I saw positively was now Japanese banks actually doing something in Australia, where they've done a deal with AMP to loan $500 million. This is just a tip. They're just putting their toe in the water. Loan $500 million. This is a Mitsubishi Bank of Japan. Loan $500 million to AMP to get into the Australian residential market. And that is news as of the end of November. You can bet your life, 2014, 2015, 2016, you're going to see this boom in full force. Massive. But make no mistake, it already started. And I'd say 2013, the summary for me is this major turnaround of consumer sentiment, which really does, it really is a basis for the economy. Yes, we had a change of government, but we also now have the Reserve Bank signalling strongly they want to keep our Australian dollar down. So they're not forecasting interest rate increases, and they want to stimulate the property industry. I think great news for us, and a great basis for 2014. Thanks for listening to me.